Hi, this is Tim Bost with FinancialCyclesWeekly.com. We want to focus on some of the important work that W.D. Gann did with his cycles research as we talk together today. You know, one of the things that we're concerned about here at Financial Cycles Weekly, of course, is market cycles. That's what we're really all about. We've learned that cycle trading gives you an advantage through tools and strategies that most other traders miss out on if they're not using cycle trading methodologies. Cycle trading can help you maximize your profitability in the markets, and it does so bringing you a minimum amount of risk along the way, and that's why we're so enamored of cycle trading. Cycle trading also gives you the strength and resiliency to survive in the markets because it draws on natural market forces and on the wisdom of legendary master traders like W.D. Gann. Now, of course, W.D. Gann did his work during the first half of the 20th century, was truly a legendary figure in the markets, accomplished some remarkable results with his trading in both stocks and commodities, and he taught courses in how to analyze the markets, how to do forecasting, and in how to trade. He published newsletters and worked with clients over the many years of his career, an enormously successful trader. And one of the things that he focused on was cycles. W.D. Gann understood the importance of taking advantage of the price swings that are generated by market cycles. This was one of the keys to his enormous success as a trader. Gann said that in making my calculations for the stock market or any future event, I get the past history and find out what cycle we are in and then predict the curve for the future, which is a repetition of past market movements. The great law of vibration is based on like producing like. This was how he described his cycle methodology. Now, Gann also commented in some of his writings that the most important time cycle is the 20-year cycle, or 240 months, and most stocks and averages work closer to this cycle than to any other. He put a great deal of emphasis on the 20-year cycle, but along the way he emphasized something else that many cycle traders overlook, and that was the 10-year cycle. Gann said that 10 years is one half of 20, and very important because it is 120 months. That meant a great deal to him. He also noted that the 10-year cycle produces fluctuation of the same nature and extreme high or low every 10 years. Stocks come out remarkably close on each even 10-year cycle. Now, Gann did this analysis and made these comments back in the 1920s when he was in his heyday in producing instructional materials for traders. At that time, he had observed market history and concluded that there was, in fact, a 10-year cycle. But since that time, his work and his analysis has been validated many times over. In fact, if we look at the history of the Dow Jones Industrial Average over the more than the past century, this is a chart going from 1886 to the year 2009, and what we're doing with this chart is simply showing what happens in each year of the decade on average in the price of the Dow Jones Industrial Average, starting with the years ending in 0, going up through the years ending in 9, and that final bar on the right is a summation of all the years. So over this period of time, the market went up, or the Dow Jones Industrial Average went up by an average of 6.84%. You can compare that price bar on the right then as kind of the baseline or the median increase in the market year over year, and see then that there are some radical extremes, the highs and lows that Gann mentioned, that do occur every decade. Now, what we have, of course, are averages here. We can find exceptions to the rule, but on average, that worst year is the year ending in 0 over on the left there, with a substantial decline of about 6.5% on average in years that end in 0. The big bar in the middle is years ending in 5. with an average increase of almost 29% over the many decades that were studied in analyzing the Dow here. So we can see then this is the cycle that Gann was talking about in stock prices over the decade. Now, of course, with our trading here at Financial Cycles Weekly and in the courses that we teach and in the consulting and coaching that we do with individual traders, what we emphasize is shorter term cycles and the implications of those more immediate price swings to allow for profitability in the markets. We have discovered that cycle trading can help you maximize your profitability in the markets, and we've proven this year after year after year with our cycle trading work here at Financial Cycles Weekly. And of course, the idea is that it reduces the amount of risk that you take as well, which helps enhance the profitability from that end also. So it's what we do with our Gold Plus Elite membership program and our publications here at Financial Cycles Weekly, and also with our new class on cycle trading cash, which emphasizes mastering market cycles as a key tool for trading. This is Tim Bost with FinancialCyclesWeekly.com. Thanks so much for joining me today.